All right, Eel Nerds, episode 164. I have my pickup truck full of muni bonds and city sewers and college dorms and all kinds of crazy stuff right there, loaded in front of you. And I wanted to share what I have learned about muni bonds. There are some good, bad, and ugly things I learned, like all things in life. Everything has its pros and cons, and here I am sharing my lessons with you. And a couple quick things. Thank you for bringing this up to 467 subscribers. That is just 9,500 something short of 10,000 subscribers. So I hope to get there one day. Well, there is an income investing roadmap, which is a playlist. I suggest you start there if you're new. I will be adding a new playlist specific to muni bonds as I am enamored by this world right now. The yields are way higher than the treasury. And so thank you, municipalities, for making this easy for me. Most importantly, don't trust anything I say. Make sure you do your own homework. All right. Well, we'll look at the market temperature and the yield bear, and then we're going to do a deep dive on the muni bond area. It's an area of great interest to me because yield Super Bowl has now flipped the script, and muni bonds are very attractive, and so I want to understand them even more. Well, my entire portfolio, for those of you who are new, is kind of a steady eddy. It doesn't react to too much, and there is a reason for that. I mean, the line that's going crazy here is the Nasdaq, and mine kind of floats well above it. My equity portfolio also is well above the Nasdaq, and there is a reason for it. The reason is quite simple. I put a very small fraction, 1.25%, something like that in equities, and that I agree is a little too harsh. I should probably increase it. I will over time. I'm just not in a hurry to do it. Most of my investments are in fixed income, and my equity plays are collecting nickels in front of a steamroller, as Warren Buffett would say it. I just come in. If there are a few bucks to be made, I take it and leave, and I don't hold my equities too long, barring a few exceptions. But this episode is not really about equities. We're going to deep dive. I unloaded some of my muni bonds from that giant pickup truck, put it in a wheelbarrow, and I'm going to put a microscope and start learning about these muni bond collections and share what I learned. Speaking of sharing what I learned, I want to make sure you know that I am not a wealth management advisor. You need to check your own work and do your own research. And this is education and not investment or tax advice. Well, a couple of muni basics that I just brushed up on again. Munis are federally tax exempt in every state. However, they are only state tax exempt in some states. Illinois taxes munis, even if you buy an Illinois muni, so that sucks. Some munis are AMT exempt, so you have to be careful about picking them. And in general, muni defaults are very infrequent, but they do happen. Hello, Detroit. Detroit had a bankruptcy and it trashed a lot of munis. People got 40 cents on the dollar, so don't think it'll never happen. You just need to be smart there as well. So I have designed a filter that I use, and then I still do several checks after that. I look for various muni maturities. I just bought a 10-year muni today, and I generally go even longer term in munis initially because the yield to maturity is north of 5% and federal tax free. So that is very sweet for me. Um, Price, there are some simple rules, and we'll go into that. If you buy a muni at a really big discount, you're going to get bit because there is something called the de minimis rule, and that's why I have a playlist now. If these words don't mean much to you, please listen to the muni playlist. You will find it in the list of playlists for this channel. There are also some nuances with the original issue discount and tax treatment, and we're going to go into that. And you generally want to buy munis that are credited very highly, and just for what it's worth, don't buy munis that are not exempt from AMT. Well, if you applied that filter, you'd get a laundry list of bonds. But even before you do that, the question is, how did these bonds even get there? So in the deep dive, we're going to look at what is the OID. And we're going to start there and go through the life cycle of a muni. So an OID is called an original issue discount. The question is, how does that get set? So here is the birth of a muni. I subscribe, because I have nothing better to do, I subscribe to new muni notifications, and it says, hey, by the way, here is a new muni that's going to come. It is the water supply for the city of LA. And you sit there and go, okay, well, everybody's going to drink water in LA. Sounds like a good thing. Let me learn more. And they give you the credit rating, which is pretty good. And they say how much they're going to raise. And you can see how there is a really wide maturity for the bond. It could be anything from 2 years to 30 years. And you go, whoa, that's interesting. And the yield also has a big range. The reason it doesn't give you a specific yield is because this is going to go to an auction, very similar to a treasury auction, and the auction will set the yield for each of the maturities. Not only that, the auction will also set what is called the OID, the original issue discount. So unless you participate in the muni auction, you will not really see the benefit of the OID. We'll talk about it a little more. You also are entering blind within reason on the yield of a muni. So you go, ooh, that sounds a little, I don't know if I want that. Then you want to read what is called the summary information, which is available in the new muni notification. And this says, by the way, this department is applying for a muni. We just want you to know that there is a fund called Power Revenue Fund, and that is the only fund from which we will pay your coupon. The city of LA does not really pledge anything towards whether or not we will pay this bond. And you go, wait, I thought I'm supplying water to the city of LA. And so if you can't pay my coupon, do I get to put a lien on the city of LA? And the city of LA is saying, no, 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 no. When we charge people for drinking water, we'll take that money and put a portion of that money into a fund, and it's that fund which is going to be your security. The reason I point this out is the security of a bond is very important. Sometimes, it'll be a very specialized purpose. They'll say, we're building a new sewer, and the sewer is going to take 7 years to build, and and I know these projects run late. And so on the 8th year, when they think they're going to pay the coupon, if the sewer is not done, I don't know what happens. So things like that you need to be thoughtful about when participating in a new bond. And there are, just so you know, there is insurance they have to buy. So you want to read the fine print and see if you're comfortable with what is the security if the bond payments are at an issue. Here is a different one, and to be clear, I'm not recommending you do or don't do any of that. Here is a different one, and there is always a section called bond security. Even before they issue the bond, after they issue the bond, you can click on what's called summary information. And this says, hey, our members are obligated to pay you, and the obligated group will give you a certain security. This is a completely different bond. This is a bond from South Dakota, a health system called Sanford Medical Center. And Sanford says, we are going to mortgage a bunch of our facilities, the heart hospital, the medical campus, and that's our security. And I like that. So if you do not pay my coupon, I'm going to rename that hospital the Yield Nerd Hospital or something. I'm not sure, but at least the security is a whole lot more solid on this bond. So somebody's paying something at that hospital, and they are giving that building to you. There is a Texas A&M dorm construction bond. I just bought that today. It's a 10-year, and there you own the land as a security. So if somehow the dorm is not built, then you get to evict everybody and sell the land or something. But it's a whole lot better than I'll pay you if I collect the money. Otherwise, I'm so sorry. So I do tend to read the bond security carefully. Here is one that says, the mortgage property will be our security. And if we don't pay, I suppose you can put a lien on the property. Now, the way you find out new issues. So the step one, where you get an email saying a new issue is going to happen. Step two, even before that happens, when you get the email, if you on Schwab, now I don't know if you use other brokerages, wherever you see find bonds, there should be a section called new issues. If you go there, you'll see a whole bunch that says close, close, close. These are things that were announced last week and the auction has closed, but you will see the TBD section. The TBD section are the bonds that are yet to come out on the auction. And you can click on those and you can read what is the bond security, how much are they raising, what is the duration. So you can read stuff like that. And the reason you read stuff like that is you then wait for that email. When that email comes, you can then say, I want in, and you get to be in the auction. But remember, you don't find out what the OID is, and you don't even know what the coupon is. You're participating in an auction. So a little bit nerve-wracking, but it is what it is. But once the auction is over, it will no longer be a new issue. It will start trading in the secondary market. You sit there and go, okay, that's good to know. But almost every bond, you can see here, almost every bond has an OID. You go, what's this OID thing and how do I benefit or get bit by it? So here is an example. This bond has an OID of 97.4 and it pays a coupon of 4.42%. You go, that sounds lovely to me. And this is Lauderhill, Florida capital improvements. So somebody's putting sewers and building sidewalks and whatever it is in some county in Florida. And when they went to auction, they said, not only will I give you a 4.42% coupon, we are so nice. We are also going to give you an OID of 97.47, which means that approximate $2.50 is just given to you, federal income tax free, if you participated in that auction. How beautiful. So you get to make the coupon 4.4% federal income tax free. And when this bond matures, if you hold it to maturity, it matures at $100. So there is like a double incentive to participate in a muni auction. I am going to because I'm excited by this. Just be careful. I'll tell you a couple of gotchas. But let's say that you waited until the bond is trading in the secondary market and you then bought this. What is the implication of that OID? So let's say we'll take that same example. The OID is 97.4. The OID is a benefit only if you're part of the initial auction. If you then bought it on auction day, you get that free $2.60 federal tax free and you enjoy the coupon. Good for you, lucky dog. If instead you waited and it traded for 98.5 in the secondary market, well, Uncle Sam says, well, you didn't participate in the auction, so the difference between 100 and whatever you paid, now there is a de minimis rule, and I'm assuming this bond matures in 1 year. If it matures in 6 years, for example, 6 times 0.25, and if de minimis is a concept you don't know, you have to watch some of the previous episodes. So 6 times 0.25 is the de minimis, they would say. If this bond matures more than 6 years from today, you are good to buy this at 98.5, and the entire difference would indeed be federal income tax free. If it matures in 1 year, you're screwed. That 1.5 is going to be treated as ordinary income. Well, what if you bought it below the OID? You thought you made a killing. You're like, wow, my yield to maturity is amazing. I'm going to make $4.50 on the bond when it matures, and I'm going to get this coupon. I killed it. Wrong answer. That entire difference between 100 and 95.5 is ordinary income. So there are some real challenges if you were to buy a bond that has an OID below the OID. And you can sit and play with this de minimis thing and hope that the bond doesn't go too far down because it could bite you in a different year. So my OID lesson is very simple. I do intend to participate on a couple of auctions. I will know when I find the right bond with the right security. I'm not looking for security just from a fund. I'd like a building. I'd like local taxes, ad valorem taxes. I'd like more guarantees than just we have the special fund and we'll be nice to you. But when I find such a bond, I do intend to participate in that auction. On the secondary market, I am probably going to stick to bonds that trade very close to par. I am going to avoid bonds that trade far below par because I run the risk of giving up most of my yield to maturity in ordinary income. That is me. You do you. So what is my investment thesis? My investment thesis, apparently, I'm also buying the Leaning Tower of Pisa. Italy must be doing some muni bonds. Thank you, Dolly, for that incredible image. But on my muni thesis, it's pretty simple. I'm going to look for munis that trade close to par. Always will look for good credit rating. You do need to see the volume. You do need to make sure that the coupons plus the federal income tax. You have to take your effective federal income tax and add it, not marginal, your effective federal income tax. And if you put all of those together and there is good bond security, then it becomes an interesting muni to me. So I started collecting a whole bunch of these. I published a few shorts with some examples. So here is where I am. My head is missing. I wish the image was aligned so I can align myself to that head because I work out. My body looks exactly like that dude's. So here are my holdings. As you can see, I have muni holdings in many different states: Utah, Tennessee, Texas, Pennsylvania, Illinois, state of Washington, South Dakota, you name it. And they also are distributed across different causes. Some of them are hospitals, some of them are municipalities, some of them are sewers, and so on. And so you do you. I'm starting to collect muni bonds, and thank you for watching Yield Nerd.